In today's video, we'll discuss about what is an RESP, who can open an RESP, how does it work, how to open an RESP, how many types are there, RESP contribution limit and withdrawal rules. What is this RESP? RESP is a registered education savings plan. It's a long-term savings plan to help people who wants to save for their children's post-secondary education. You can contribute up to a $50,000 lifetime limit per beneficiary. In this RESP, there are three main participants: subscriber, beneficiary and promoter. Subscriber is a person who opens the RESP on behalf of a child and makes contribution. It can be an individual, a child's parent or a caregiver. Beneficiary is nothing but a child who is named on the RESP who will get money from RESP to pay for their education after high school as long as the school and program are eligible. Promoter is the financial institution where the RESP is held and which will pay out the funds when the child attends post-secondary education. RESP can be opened by anyone for a child. They can be a parent, grandparent, relative or a friend. Now you may get one question in your mind. If we want to open an RESP account on child's name, does child requires a social insurance number to open an RESP, isn't it? That's absolutely right. To open an RESP on child's name, child should have social insurance number. If you are a temporary resident and your child is 12 years of age or older, then your child can apply for SIN. If child is below 12 years of age, then parents, legal guardians or legal representatives can apply for a SIN for child. Now let's see how does an RESP works. First, a subscriber enters into an RESP contract with the promoter and names one or more beneficiaries under the plan. Then, subscriber makes contribution to the RESP. How much you want to contribute to the RESP, that is up to you. I will show you about the contribution percentage in my next slide. Once you open the RESP account and makes contribution to the RESP, if you are eligible, you may get government grants which will be paid to the RESP. It can be either Canada Education Savings Grant, CESG, Canada Learning Bond, CLB or any designated provincial education savings programs. Let's talk about these grants in detail. Now let's see what is Canada Education Savings Grant. The CESG is the money which federal government adds to an RESP to help people with the cost of their kids' post-secondary education. Who is eligible for CESG? To be eligible for basic CESG, a child must be a resident of Canada, must have a valid SIN, must be named as an RESP beneficiary. Canadian residents can qualify to receive 20% of the first $2,500 contributed into RESPs for each child each year up to their children turn 17. The maximum contribution from CESG is $7,200 per kid. This is the Canada Education Savings Grant summary chart. In this chart, you can find three different adjusted family net income for 2023. Based on your family net income, you will receive Canada Education Savings Grant from Employment and Social Development Canada. For example, if your adjusted family net income is $53,359 or less, then you will receive 20% of additional amount of CESG on the first $500 of annual RESP contribution, which will be $100. If your family net income is more than $53,359 and less than $1,06,717, then you will receive 10% of $500, which is $50. If your family net income is more than $1,06,717, then beneficiary is not eligible to receive CESG. All these three family categories will receive $500 as basic CEG on first $2,500 of annual RESP contribution. Similarly, in the third row, you can see the maximum yearly CESG amount based on your family net income and contribution. So you may qualify for lifetime maximum CESG of $7,200. Now let's see what is Canada Learning Bond. The Canada Learning Bond is available for children and youth from low-income families who were born in 2004 or later. The Government of Canada contributes up to $2,000 to an RESP for an eligible child. This includes $500 for the first year of eligibility plus $100 each year the child continues to be eligible up to he or she turn 15. No personal contributions to an RESP are required to receive the CLB. For this also, child must be a resident of Canada, must have a valid SIN, must be named as an RESP beneficiary. This is the Canada Learning Bond summary chart. You are eligible to receive Canada Learning Bond if you are a family of 1 to 3 kids and your family net income is less than or equal to $50,197. Similarly, for 4 kids and 5 kids, if your family net income is less than the amount shown in the table, you are eligible to receive CLB. Families with more than 5 children, they can call to this number. Now let's see how to open an RESP step by step. First, you have to get a social insurance number for the child and get one for yourself if you don't have. Once you get the social insurance number for yourself and the child, choose an RESP promoter such as banks and credit unions which suits for you. Visit your local promoter, open the RESP and name the child you are saving for as beneficiary. When you open an RESP, your promoter will help you apply for the CESG, CLB and provincial benefits at the same time. After applying for an RESP, any benefits that the beneficiary is eligible to receive will be deposited automatically. Let's see what documents are required to open an RESP. Social insurance numbers for both yourself and for the child and valid ID proofs for both yourself and for the child. If kids are below 12 years and they don't have proper ID proof, then parent or legal guardian need to provide their own valid photo ID like valid passport or valid Canadian government issued photo ID like driver's license or photo card. If kids are above 12 years, then they can provide valid passport or valid Canadian government issued photo ID. If they don't have valid photo ID, then they can provide a valid non-photo ID that contains their name and date of birth. Now let's discuss about types of RESP. Totally there are 3 types in this RESP. Individual RESP, family RESP and group RESP. Individual RESP. Only one beneficiary can be named under an individual RESP. In this RESP, you need not to be related to the beneficiary. The beneficiary can be named to the RESP at any age. Contributions can be made to the RESP for a maximum of 31 years regardless of beneficiary's age. For example, if you open an RESP for your 5-year-old child, you can make contributions to the plan until he or she turns 36 years. Contributions made to this account are specifically designated for kids' education. Now you may get one question. What if child does not pursue post-secondary education? If your child does not want to pursue post-secondary education, then you can withdraw the contributions you have made and return any remaining grants. You will not be taxed on the amount you have contributed to the RESP, but you will have to pay tax on the income you earned in the plan. Family RESP. If you have more than one kid, then you can open family RESP. In this family RESP, you must be related to all beneficiaries either by blood or by adoption so that you can save for children and grandchildren. Beneficiaries must be under 21 years of age when they are named to the family RESP. What if one child does not want to pursue post-secondary education? The advantage of family RESP is if one child does not want to attend post-secondary education, then the funds are transferable to other beneficiaries in the plan. This gives you the flexibility to spread the contributions unequally among the beneficiaries. Group RESP. Group RESPs are also called scholarship trust or pooled plans. These are sold only by scholarship plan dealers. In group RESP, you promise to buy units from the provider. There are few disadvantages in this group RESP. You have less control over the investment because the money is pooled with other contributors. You don't have the ability to choose specific investments. If you leave the plan before it matures, you will get back your money you put in, but your investment earnings go to the remaining members of the group. What will happen if you leave group RESP? If you change your mind and cancel the group RESP within the first 60 days after signing your contract, you will get all your money back. If you cancel after 60 days, then you will get your contributions back, but the amount you get back is always less than the amount you put in. Now let's discuss about RESP contribution limit. The total lifetime contribution that can be made to an RESP is $50,000 for each beneficiary. As far as the Canadian Education Savings Grant is concerned, there will be a maximum grant of 20% or up to $2,500 per year contributed to the RESP. That means there is a lifetime maximum of $7,200 in grant money per kid. Is there a penalty for over contributing to an RESP? Any contribution that exceeds the $50,000 lifetime limit is subject to a tax penalty of 1% of the over contribution per month until the over contribution is withdrawn. RESP withdrawal rule. While the subscriber may withdraw their own contributions without being taxed, withdrawal of any income earned from an RESP is taxed. That withdrawal is called an accumulated income payment. I hope this video is helpful. If you like this video, please like, share and subscribe. Thank you everyone.